Hello, today is February 15th, 2025. As always, we'll start with our disclaimer. We'll go over our calls, we'll make our predictions, and since it's the weekend and since I have some new subscribers, I'm briefly going to go over the longer term picture. This is my trading plan for Tuesday when the market reopens. Remember, my calls can be wrong, my calls can change. Trade at your own risk. February 20th, I'm busy all day. Probably won't make any videos, although I'm not sure. If you want to order the webinar with my rules, please give me a Gmail address. When it's some other address, I'll get it there eventually, but it's a lot of effort. I sometimes have to get my son to help me out. The Gmail address, it goes right through. Friday, we look for the pattern with the early low. That's this. Tuesday, when the market reopens, it should have the early high. We said the commonest thing was a gap and prompt move outside the day's range. That happened. Next most common is to close a little change. We closed off 0.01%. So we got the first and second most common things. Commonest thing was gap and move. Next most common, close a little change. So those happen. These are the patterns I expect to see next week. During the day, MEJT said this drop was false. It retraced. Said this drop was false. This rally was false. They've all retraced. That's played out. We do have an optional target, 61.2693. Doesn't have to print, but almost always will. I'm expecting to see it print, but as always, if we get smartly in the undesired direction, I'm not looking forward to that printing. Well, let's take a look at the longer term picture. This is a weekly chart with DeMark's count. We have bar 12 of a sequential sell countdown. We have either bar 11 or 12 since the last three bars don't have to obey all the rules on the DeMark combo countdown. Bar 13 can finish early, so any rally of any size next week will be bar 13 of sequential and combo sell in alignment with each other, which is a negative pattern. Now, when they're in alignment, it increases the chances it's going to work. But the sell signal doesn't have to mean that you drop. It just means you're overextended. You can correct in terms of price, certainly. You can also correct in terms of time. And you can even get more overextended. Those can fail altogether. And if it fails in grand style. But at least if you're looking to pause here, any rally here gives you a reason to expect some kind of either consolidation or a drop. Well, this is the long-term count. We've completed an ABC. C works to within 3 decimal points. I think that's the right count. I know other people are counting this as a 5-wave rally. I can't do that. I don't care if someone has a count that obeys all the rules. It isn't the same as mine. But in order for that to work, this would be like 1, 2, 3, 4, 5. This would have to be a 5-wave structure. Let's focus in on this from the March 2009 low. Here's the March 2009 low. This is not a 5-wave structure. I mean, you can see a wave here, but it's a 3. I mean, I can see a wave here, but what's this? That's not a third wave. That's an overlapping corrective wave. This is not a 5-wave structure. And if it isn't a 5-wave structure, that's not wave 1. And if that's not wave 1 of some degree, it's not a 5-wave structure. Now, why is it important? If you count this as a 5 and this is 4, then we're in the 5th wave. And we're going to finish the 5th wave and then go into Tank City. We're going to collapse. But that's not what this is. This is a long consolidation over a generation. And the wider the range of the consolidation, the wider the ensuing advance. You have a tight consolidation. You're not going to get much of a rally after it before you reverse. You have a consolidation like this, that's this big. You're going to rally for a long, long time. and this is just my first target, which is around 69.98. So regardless of what happens over the short term, we think we're going to rally for a whole generation. But how about right now? We already see any rally next week will set up to mark overextended indicators. We're trying to finish this wave 4 at some point and rally into wave 5. If wave 4 is over, this move should be a 5-wave structure. And if it isn't a 5-wave structure, you're not in the 5th wave. Well, this is not a 5-wave structure that I can see. This is a 3. I mean, you've got your ABC for here. You've got your B, which is clearly a 3. And you can count this as an ABC obeying all the rules for A. That's a clear 3-wave structure for B. And although you can count this as finishing C, which does have a FEB ratio with A, I don't think that's the only way to count it. If that's an A, gold A of blue C, of black C, you can then count this as an ABC, and if we stop here, this is the end of gold A, of blue C, that's B. You can see the waves will all balance out around 61.41 plus cash. I mean, if that's a, if this is wave A, and that's B, and that's C, that all evens out. If you're in wave blue C, and that's your A, and that's your B, the waves balance out. If you're in your black C, and that's A, and that's B, the waves balance right at the same place. And if we're just finishing black C, black A balances out. I mean, right at 61.41 and a half, roughly cash, you've got wave balance, and that finishes an ABC up. Doesn't mean it's the only count that works, but if we rally from here, I think it's a perfectly reasonable count. If that's the right count, if we're still in rally mode, then we're still in wave green B, which would be here. And if we are in green B, this would be A, this would be B, in C, this would be A, B, C would balance out right at the 61.8. I mean, everything works at that price. Now, that would be green B. You then have to have a green A, which would have some kind of relationship. You have to have a green C, which would have to have some kind of relationship to green A. But still, if we rally from here, it would be bar 13 by DeMarc's work. You get balance of the waves around 61.41 and a half. There'd be one more drop, which probably wouldn't be a total disaster, and then you'd be off to the races on the upside. Doesn't mean it's the only count, but it certainly is a valid count, and it's a plan. Now, of course, we open down here, you might have to change your plans. But that hasn't happened yet, and I'm hoping we're going to get this and get 61.41 and then reverse. Tuesday's pattern has the early high regardless of where we open. Typically it's a bullish day with a high and a fine low, and failure is a straight line drop. There's a higher optional MEJT target. The odds favor it printing Tuesday. If it doesn't, we'll just forget it. The wave count tells us we're still in the 4th wave. There's wave balance around 61.41 plus cash, where there's Fibonacci resistance, and any rally here would be bar 13 of DeMark's combo and sequential sell signals on the weekly chart. In addition, the last half of February has not been a good time to be long the market. That being said, sentiment indicators call for a low in this area in terms of time. These aren't pinpoint indicators. It's possible at least we hit 61.41 plus cash target, drop into Woodson's change in trend date of March 6 with some leeway, complete the current consolidation, and then rally. That's my plan at any rate. I reserved the right to change it, but as long as that's not invalidated, I'm going to work on the basis that that's what's going to happen. One more rally to 61.41.5, a drop in that wave green C, and then off to the races probably after a low in early March. And Tuesday is the pattern with the early high, and that's today's call.